And we are live. Hello, everybody. Happy Sunday. This is December 19th, 2021. We're almost finished with the entire real estate year. We only have a couple more weeks left. Christmas is right around the corner. And we need to talk about what happened in 2021 to know what could possibly happen in 2022. We're going to be reflecting on that with a few people today. Orlando Minor is going to be with us today. Yay! And Javier Vidana is supposed to be popping in. I don't know if he's going to be able to make it or not, but hopefully he will. But the thing is that we need to understand this has been the craziest real estate market in history. I started real estate in right before the last crash. And I can honestly say in how many years has that been? 14, 15 years. Mm-hmm. This has been the most rocky road insanity ever. I have a friend. His name is Orlando Minor. He's going to be coming up here real quick. We're here. Oh, Orlando! Hello.
hello.
Orlando, tell them a little bit about yourself. I know that you're coming from an investment side, so tell them a little bit more about you, so we can talk about this real estate market that we were in 2021.
So I've been a lender, a mortgage lender for about 17 years, been a investor for about 14, 15 years, been doing that my whole life, have a background in accounting, was in the Air Force as an accountant, so that's how I started off. I also run a YouTube channel to help individuals get into their first rental properties and to talk about the ins and out about the housing market and all things rental and finance.
You're a real accountant, not like a TikTok accountant, not like an OnlyFans accountant. Okay.
No, I actually have a degree.
A legit degree.
Yeah, a legit degree. Yeah.
Because sometimes people say I'm an accountant, but that isn't really what they're doing. They're not an accountant. But he's a real one.
Yeah.
I had to throw that out there. I can't.
No, I understand it.
I'm gonna throw. I do not have Eddie, the producer, here today, so this is on my own. So I do need everybody to do me a favor. Be patient with me, first of all. Secondly of all, if you do have any real estate questions, make sure you put the word question in first, and then followed by your question. Of course, super chats supersede any kind of other questions that are in the chat, but if you do have any, just let me know. But I want to share this one article with you that was shared with me by a subscriber. If I can, let's see if I can do this right. Let's try the Chrome tab. All right, here we go. Okay, here we go. This was super interesting. Okay. So in the, was it Washington Post, this article popped up, right? But they removed the article and it's now only on other websites. The Washington Post does not have it anymore, but it says this block was used for first-time home buyers and global investors bought in. The homes, on Tammy Sue Lane aren't fancy, modest in size, clad vinyl siding. The houses were priced below $200,000 when most were about 15 years ago. For most families in suburban Nashville, they represent the first chance at home ownership. Over the past 6 years, 19 of the 32 homes on Tammy Sue Lane have been purchased by billion-dollar investment ventures, part of the unprecedented flow of global finance into American suburbs. Less than 10 years, the company has amassed one of the largest portfolios of single-family housing, becoming the landlord of tens of thousands of families. I want to show you this. I'm going to show you this one thing really quick. This was the part that, like, oh my God, here we go. This is where I wish I had Eddie here, but this is the map. This is what they own.
That's a lot.
I mean, this is ridiculous. And so anyways, this is what I've been saying for a long time. All right, let me stop the screen sharing. Oh, why is it still up? Remove. Okay. This is why I need Eddie. I've been saying this since I actually looked it up, since it was November of 2020. that big corporations were coming into large cities and buying up the least expensive homes, the most affordable homes in all the major cities because of the fact that they were trying to turn us into renters. I said that in 2020 and people said I was crazy. Then BlackRock comes around and
Mm-hmm.
then again all the headlines are like, well, they're really just trying to improve neighborhoods. They're really trying to make them better. No, they're not. And then now this is coming about. I will stand on this, and I mean you guys can argue with me all you want. But do you believe that these bigger corporations are trying to help the housing market, or do you think they're trying to turn us into a renter's nation?
Orlando, you want to take it?
I'll let you go first, and then I'll go ahead and.
So I don't think that corporations are out to help. They are out to pad the bottom line, and that doesn't mean that they're how to phrase this. So the stock market has such volatility, NFTs have such volatility, and crypto, there's so much volatility in general that I think that BlackRock and so many of these other companies buying tracts and tracts of affordable entry level single family homes. Notice they're not buying condos or townhouses or HOAs or apartment complexes. They're attempting to hedge their funds, park their money into what is a safe entity, and ride out the
Inflation.
So that is what's going on. I don't think it's necessarily evil or terrible, but it is absolutely detrimental to the actual home buyer, to the entry level home buyer, and it's going to have repercussions for quite a while.
Yep. And do you know what I didn't do, which I feel terrible about? I'm going to let you talk in just a minute, Orlando. I have not introduced Tanya Cool, who's the coolest real estate agent out of Pittsburgh. She was here last week, and she's here again with me this week, and she's in town, so she's sitting right next to me. I'm sorry, Tanya. Okay, Orlando. Okay. Orlando, you shoot what you think.
No, I definitely agree with that. I think that all of these corporations, and I kind of have an insight with it because I do a lot of business on the lender side with a lot of the bigger companies and whatnot. So I see the same thing, that they're just trying to hedge their bets, especially when it comes to inflation and other types of investments that a lot of these companies, because a lot of them do like equity and all that other stuff, and real estate has always been the safest type for these bigger companies when it comes to investment. So they're just trying to hedge their bets, trying to make sure that, that they don't lose whenever if a downturn happens, that they will still, they won't lose their head in the whole situation.
Every single time there's ever been a downturn in the economy, the first thing that big people with large pockets of money, what do? They always hedge their bets on housing, especially when it comes to inflation. Follow the smart people. Oh, here we go. Lindsay Kingsley says, big corporations like BlackRock want to control our minds, so renting ads are coming up. If they own where you live, they own your life. Nothing is stable. Keeping humans unstable helps to get control. I know it sounds super crazy, but the average age of a person buying a house now is in their 30s, their first home. The average age now is in their 30s. Millennials are buying their first houses in their 30s. When we were kids, it was 20s. And then when my parents were young, it was in their early 20s when they, they were able to buy a house with a regular job, like milkmen, teachers, firemen. Those same people cannot afford to buy a house now. And it's going up higher and higher and higher. I do want to ask you though, did you see something really I want to pull up this one thing, but did you see that some people are saying that that they don't think that they think that there's going to be a crash in 2022, that because all these investment firms are buying them, it's because of all these other things, and that's why, for instance, Zillow bought a bunch of houses and now they're dumping them, and so the housing market is crashing. What do you feel about that, Orlando and Miss Tanya? Let's go.
Yeah, so you're asking, what do I think about Zillow dumping their I guess what most people call their like garbage back onto the rental market? Is that what you're saying? Yeah, well, I mean, Zillow's gonna, when they found out that they couldn't, double sell the properties and whatnot and get exactly what they thought they could get out of it, doing their whole iBuy program. Yeah, I saw that kind of coming, where they're gonna just throw stuff back onto the market that they didn't want. But it's still, I still feel like it's still a high price, even though that they may disregard it as stuff that they don't want. They're not selling it for what. I mean, they want to make a profit off of it, so they're still trying to sell it for what it's above. I just think that, I don't know. I think those guys should just really kind of stay out of the market. And they did a lot of things that any investor would have done. Number one thing, and they just skipped over it and said, you know what? We don't need to do making sure
due diligence.
Due diligence. You know what? We don't need to do any of that. Forget all of that. The market's just gonna keep going up, up, up. So let's keep doing that. So yeah,
what their fatal mistake was, though. The futile mistake is that they didn't count on the fact that they wouldn't find as many people to repair the houses that they purchased, and they didn't find enough people to fix them up, and supply chain issues. They didn't account for any of that problem. None. And even though that the prices kept going up, they couldn't find the people to fix the houses that they purchased. So they're either selling them at a loss right now from what they bought it. I read one Facebook post where the person sold their house to Zillow for $450,000, and then Zillow contacted them back and said, "Do you want to buy it back for $395,000?" and he took it. He's like, "Yeah, I'm gonna buy it back. Hell yeah, thank you." So, that's nuts. It has been the craziest roller coaster throughout this. Look, if anybody has any questions, make sure you pop them on the screen. I do see one come in. Go ahead.
Sure. So, in a nutshell, you cannot moneyball the housing market. And the iBuyers learned you cannot moneyball the housing market. I actually watched Moneyball for the millionth time the other night. And I love that movie. And it's what data analytics has done for so many industries is exceptional. However, the game of baseball is played the same in every single stadium across America. You have a fixed finite amount of inputs. And in the housing market, you do not have a fixed finite amount of inputs. We know, as real estate agents and lenders, that the house at the end of the cul-de-sac sells for more than the house at the beginning of the cul-de-sac. We know that the house that faces the lake in the same development goes for more than the house that faces other houses or that backs up into other houses. So you cannot vertically integrate a model, and that is exactly what Zillow and iBuyers try to do, and they got burned for a lot of money. Yep. Rightfully so.
Open Door did better at it. They did better.
I agree.
Yeah.
I agree.
Oh, here he goes. Killian 1. Longtime subscriber, always a great person to have on the live streams. Ask the best questions. Question: do you think this crazy market and these investment corporations will affect those with mortgages? I did everything I could to own my own house outright without a mortgage. What do you think, Orlando?
I don't think so. I think as far as mortgages go, I think that obviously the Fed and whatnot, what's going on with those, that's going to go up incrementally no matter what, which will affect the mortgage rates. But I don't think that these guys purchasing, homes or whatnot is going to affect mortgages as far as that goes, in my opinion.
Hold on one second. We're going to have Javier Vidana. You're live on the air.
All right, I'm going on now.
Oh, you're going on now. All right, everybody, hold on tight. Javier is coming. Did I say it right? Javier.
All right, I'm going on now. See you in the
Vidana. Did I say it right? Vidana?
We'll see if you can get it right in the next second so I come
Okay.
up.
All right, see you in a second. Did I say it wrong? Oh, I'm sorry. My Latin isn't very good. You can work. You are better at this than I am. You would think with my husband being Colombian that I would speak Spanish, but I don't. What do you think about Killian One's question here?
Will it affect them with mortgages? Most people are putting down enough money that they're not, since the housing market is appreciating, it's a worthwhile investment. Not very many. I mean, you can answer this better than I can, Orlando. What percentage of people are buying with variable rate mortgages? Because if you have a fixed rate, it doesn't really affect you. You're in where you are. That's a monthly payment that's not going up. It's not going up like gas, water, sewer, trash, property taxes, which are all those bills are going up, but your actual fixed mortgage payment is not going up. So it's actually the one constant bill that you have in your life.
Yeah, there's not many people buying with variables. I think everybody kind of learned their lesson from '08 and the horror stories when it comes to that. So I see more people just like, that is like the number one thing that a borrower will number one say, it's going to be a fixed rate, right? It's going to be a fixed rate, right? So, so it's not many people doing variables.
Yep. I don't know if anybody, like the mortgage rates are so low. Like,
Sure.
why would you do that
Why
to
would
yourself?
you, right?
And like, I don't know, like, unless you have investment properties. Some people have variable rates because of investment properties through their company. I've seen those like arms.
Yeah, I've
and
seen
flings.
those too.
Yeah. Sometimes you just have to do that. I'm not saying that I haven't done that before. Javier, never late. We're talking about the housing market in 2021 and what happened. And right now we're talking about mortgage rates and all sorts of things. What do you want to say, Mr. Javier, as you come in late? You might want to get yourself unmuted first. You're on mute, my friend. There you are. Can you hear him? I can't hear him. No, I can't hear you.
Can't hear you, my dear.
Oh no, we can't hear you.
Tears.
I can't hear him, no.
Tears.
Yeah, there's a little icon. Nope. I'm gonna pull this up really quick while he's getting his. Okay, let's do this.
Test.
There you
there you
are.
Hello. First,
Hey.
I want to thank Kristina Smallhorn for inviting me on this beautiful Christmas day, almost Christmas day. I apologize for being a little late, and I'll make sure to give you guys the best 40 minutes of your lives.
Wow. Those are big fighting words.
Wow. I'll let it know.
Maybe of the past 24 hours. I don't know about life.
All right. So this came in from, I don't know if you've seen this article, Javier, in Orlando. It says the weird, wild housing market in 5 charts.
Love a good chart.
All right. Let's pull up one of the charts that you had. Which one did you like? Is this the chart that you wanted to go over?
I'll go over any of the charts. I love them.
Okay.
Let's see. So 30-year mortgage trends and home transactions.
How much rates will affect the sales, home sales? Okay, this is an Orlando thing. Do you think that mortgage rates right now are going to be affecting the home sales? Because there's a YouTuber right now he is blowing up with these mortgage rates, and he's gonna. Oh, Jerome Powell has just crashed the housing market. That's how he starts off his video. What do you say, Orlando? And then we're gonna go to Javier.
No, I don't think they will. I mean, the rates are so low right now. I mean, they're just so low. Yeah, it's going to go up. I think they're going to do 3 rate increases next year. At least that's what it's proposed. So I don't see it slowing it down like that. The mortgage rate slowing it down like that at all.
What do you think the number is going to be at the end of 2022? What do you think is the highest it's going to go?
Close to 5, maybe.
I think just under 4. But that's
you think just under 5?
4.
You
just
think
under
4?
4. Just under 4. Just a hair, like
just a hair.
Just 3.89 or some baloney number like that. What do you think, Tanya?
At the end of these 12 months, the end of 22, I think it's around 4.5, to be honest. Not to split the difference between you guys, but I really do. It's going to tipple over 4, and then it will hang out 4.25 for a while, and then it'll finish somewhere 4.5.
And just to be clear, I meant 5 is like a max, not like the men, right? So we're in the same ballpark, I would say.
I'm thinking lower, but Javier, what is pull out your crystal ball, my friend, and tell me what you think. Because, like I said, this one guy is like, Jerome Powell just crashed the housing market. But it wasn't Javier. I'll tell you that.
I think there's a lot of those guys now. Which is so funny seeing the evolution of the housing market guru, huh? It's just what we Kristina and I have been long enough where we've seen them come and go, and
yep.
I mean, when it comes to rates, I think what people need to realize is a lot of times, like the whole news that came out this past week, people think it directly affects it, but reality, it's sometimes the consumer's reaction to stuff that affects things. So automatically, like I'm already getting a bunch of people reaching out to me saying, "Holy crap, I need to take advantage of these rates. I'm going to be buying first thing January," right? So this hyper effect of people have the feeling the need to capitalize on the historic low rates is going to then create something that's going to then have some kind of effect to the interest rate. So I think people need to remember that our reaction to things is what affects things. So maybe instead of reacting to what the news going around us and the housing market, like gurus or interest rates going up or down, focus on your own personal budget and what makes sense there, and then make your base your decisions off of there. That being said, interest rate, I do think people aren't going to listen. They're going to overreact, and they'll probably get near my goal. My take is 3.8, because right now 3.8 is the interest rate that people are getting for 680 FICO score conventional buyers. So I think that's where we're going to go for the higher credit score buyers, and I think we might be close to 4 for the low credit score buyers.
There you go.
Okay.
I want to look. It says, so will the prices go down in 2022? That's what everybody will. That's my focus. Like, I do not talk about housing crashes and bubbles and stuff like that, because we're not in that. That's not where we're at. Those to me are scare tactic type videos to get you to click. We do have an affordability crisis of homes throughout the country, and that's undeniable. My guess, my prediction is that the home prices, and you can talk to a lot of experts, will continue to go up, and affordability will continue to go down. We do not have enough houses that are affordable in the area. What is your take on that, Mr. Javier?
Well, if I want to be juicy, I will say something's happening. But honestly, I think the news that came out last week was the perfect time. Now people that are scared to buy are now having a little push to buy. So that's going to continue to have the market go crazy, which is insane, because I feel like if they would have just increased the rates to like 3.5 or 4, it would have slowed things down then. So what's going to happen is there's going to be still a rapid rate, and then once rates do catch up and they're in near 4, then people are going to start slowing down, and then we're going to see what happens. But it's just, once again, people's reaction to things that creates things. So I don't think prices will drop in 2022. Now the years after that, I'm not too sure. I don't even know if it'll be a drop. It might be a stabilization. But
what do you think?
We're not building enough housing units, ergo there's still going to be a shortage. It doesn't take 90 days to build a housing unit. It takes months of planning and financing. It takes like upwards of 10, 11 months to put a development into place. So we're reaping what we've sown from the last reset in 08-09, and we have for over a decade underbuilt units as a country.
Bingo.
So are prices going to go up, Edgar? Yes. Are they going to be crazy fly away? Unlikely. However, the demand is still going to be strong, because people have their life cycles. People have another kid. People need to right size because they're empty nesters. People need to have different housing units because they're steps and they can't do steps anymore, or they can't take care of lawns, things like that. Their life cycles continue on.
Orlando.
Yeah, I would think, I don't know. I would say that things would stabilize, right? I do think if it does go up, I don't think it'll go crazy like it did this year. I think it'll, like a stabilize. I don't know. I just don't believe that it will go at the same rate and kind of go crazy like it did this year. I understand the whole inventory thing and like that, all that stuff, but if rates are going up, and there's just a lot of catalysts that I feel in there that things are going to happen that are going to kind of squash that wanting to buy.
I think some markets are going to see like, some of the markets are going to see like a big increase, 10, 12%. And then other markets, like smaller markets, are going to see like maybe a 3% increase. That's
like
what
Idaho,
I think.
Boise, What do you
It
think
was-
about? You
Good
think
old
it's still
boy.
gonna be moving like that?
All right, here we got another question. Harmony says, "Do you think the housing market has slowed down and will continue to? Also, if you're thinking about buying a house, is it safe to wait a year before doing so?" You can go first there, Tanya.
Sure. Great question, Harmony. There was a graph on our last week's live stream, courtesy of Eddie, showing what the difference in a 0.5% interest rate does. So my professional advice to my own clients in and around Pittsburgh is, if you're trying to wait it out for prices to reset, they're not going to do so. What's going to happen is you are probably going to pay the same price at a slightly higher interest rate. So your monthly payment will be higher.
Orlando, what do you think?
I always tell people, don't try to, time the market, trying to catch a falling knife. Like it's a personal choice. If your budget and everything makes sense, then go out there and buy a house. If everything fits in and you're not overpaying, everything matches up, the mortgage is great, then go buy a house. Don't try to say, I'm going to try to catch this deal next year or whatever. That's dangerous. Just go ahead and do what you got to do if everything's in line.
Then that was similar to what you say, Javier.
Yeah, I think one of the biggest lies that's been told to people is a great sales tactic that's worked for agents wonderfully is that, oh, your house is an investment. Yes, when things are great, it's an investment. But the problem is this idea has now handicapped people from actually wanting to move forward with it. So because they're thinking like an investor, they want to be the next Warren Buffett. They're halted and they're frozen before making the decision to buy the house. I think you guys should buy a house because you want to and you can afford it. And don't worry about the investment part of it. Once you are in a position financially where you want to think about investments, then think about investments. Just because our uncles and aunts and cousins made hundreds of thousands of dollars the last decade doesn't mean it's going to continue to be that way.
Right.
Don't treat your house like a piggy bank. Don't refinance and take cash out to pay for a new kitchen, a vacation, a kid's college education. Your house is your house. And if you refinance, it's not to add time onto it. That's a good point, Javier.
I love that. That's what happened 2007, 8, before the crash, is that people were using their houses as piggy banks, and they were buying like RVs and all sorts of crazy stuff. When they would do cash outright refis. And then when they did those cash out refis, they were not paying attention to how much they were actually paying those mortgage brokers for those cash out refis. And I had a friend of mine who was like, "Oh, I have this great mortgage broker. You should do a cash out refi for your house." And I was like, "Oh, I don't know if I should do that." She did it. They took $30,000 from her for her cash out refi. She thought she got a good deal. $30,000. She had no idea because she didn't know how to read that HUD form.
I was about to say, shouldn't that have been in the HUD form, the disclosure?
Know, but they didn't even explain it to her because it was a refi.
Right.
She just went in there and signed it with a notary. No one ever explained it to her before. She didn't know how to read that. And we were young. We were like, what, 26 years old? We don't know.
Just sign away.
Yeah, we're trusting the adults,
Yeah.
Let's look at some more charts that this thing has in it, because Tanya likes charts.
Love charts.
The supply of homes could not keep. Look, we were just saying
we were just talking about this.
Yeah, existing home inventory for sale. Look at that. Since 1983, continues to go down, and this is when, look, I wish I had the dates, but I guarantee this was after 2007. Right here, the home builders said, "Forget it, we ain't doing it anymore.
We ain't building no more."
We can't really blame them though. And that's the thing. Like, people will want to point fingers. They want to blame boomer generations for not moving out of their houses. They want to blame home builders because they're not building enough. First of all, there's no incentive for home builders to build more houses. And they don't want to lose their shirt like they did the last time. A lot of builders went bankrupt, and had to start whole new companies because they overbuilt for the area.
Yeah. Some of them went out of business permanently, and it's not like you go to builder school. That's not a thing. Most builders are multi-generational.
Right.
What you got to say, Javier, if anything? You want to put any input there, my friend?
Well, actually, one thing that I think I'm gonna start talking about soon. Maybe you should look into too, Smallhorn. Is I've had a lot of people that's closed in the last 6 months that are having a lot of problems with their houses. Their houses that are just being done built, like a lot of problems. Like it's really bad. One of my clients, I think we're gonna involve the local news article because they're not getting any help from their builder. I'm not gonna say the name, but it's a big builder.
Yeah, that is true. I have personally seen it. There was a house that was inspected. It wasn't, I didn't represent the buyer, but I knew the home inspector. He's like, look at this. It was a brand new house, and the foundation was crumbling and cracking. You could see it all the way through. They were still tiling the inside. This was the, like, you know how like you hire an inspector as it's being built. There was cracks all the way through the foundation. They just continued to go on with this house. They knew the foundation was bad, and they continued to go on with it. The buyer, of course, backs out, but by law here in Louisiana, the seller has to disclose that has been found in an inspection. Whether they don't have to give the inspection report, but they have to say there was issues found with this foundation. That home builder did not do that. That inspector is turning him in because he did not disclose that there has been issues. All they did was go back in and fill in the cracks.
Oh no.
Yeah, it's bad. I think I used to think builders were these greedy people and they were just overcharging because they just can. But I'm going to predict that there's probably a lot of them that are there's some severe financial issues, because I remember with this particular client, they rushed the closing faster than the house was ready. And we were telling them, why don't you just take another 2 weeks to make sure the house is done right? But they were in such a hurry and frenzy to close it on a specific date. It makes me think that they're probably paying the bills with the next month's paychecks. And I think a few builders might be going upside down, or you might see some big bailouts happening, because I think they're being super slow and they can't build fast enough because they probably made some poor decisions based on what's going on. Instead of taking their time and helping people and building less houses, more quality, they're rushing them out and they're going to get in huge trouble.
Well, I think that has to do with there's a labor shortage. They're not getting as many crews on those sites to show up on time.
But they haven't reduced the demand, though. They should have decreased the demand, right? If that was happening.
Well, they should have paid them more.
They should have also paid them more. Yeah.
Yeah, you get people to show up if you pay them. And then the other thing is that there was a supply chain issue that's been ongoing. That they just haven't got enough of building materials. My husband was in at the beginning of the pandemic was in roofing. And they had a hard time getting roofing supplies.
Yeah, so. and also one thing I want to include on the financing side of for builders, that type of financing is really tough and stringent. Banks don't really like to lend to builders because of not knowing exactly where the market's going to go, and them kind of taking from one pile and paying with the other pile. So it's very hard. The type of financing that's involved with that. Nowadays, it used to be a credit line where you used to pay on the money that you used, but now it's kind of like a mortgage where you get a lump sum of money and you have to pay interest on all of that. So a lot of builders are like, I'm paying interest on this money, so I need to get this house done and move on.
Yep. One of the questions that just came up, Daniel says, how do you choose your referrals? How should I vet a real estate agent? I choose my referrals. I have a network of real estate agents throughout the country. You can ask for a referral through my website at KristinaSmallhorn.com, and I'll connect you with them. But I personally know a lot of them. A lot of them are on YouTube here. Many times if they're in the Arizona area, I'm like, hey, Javier, is this something that you can handle right now? And I connect people with people that I personally know that have worked in the industry, that I know that can take care of my my clients. And if I don't know them, I give the person that needs the referral 3 names, because if I don't have anybody in that network, I give them 3 names of people that I have looked at their credentials. This is who I think that could work with them, and they can choose who they want to work with after that. But that's how I handle my referrals. How do you handle referrals?
I know people in different markets, predominantly in Florida, because so many snowbirds come from Pittsburgh to Florida. If it's outside that area, I do the research the same way. I have a quick conversation with the agent. I try to see if their marketing is excellent. and evaluate their video presence if they're looking for a listing agent, if they're looking for a buyer's agent. I try to see how many buyer controlled transactions, and this is a big one for me. And this is my own personal thing. I only refer to solo agents or duo agents with or without an admin. I do not like the big team referral, because I had that happen once several years ago, and a client was passed off to a team person who was not the person that it was set up with. So that's a big question that I ask ahead of time. Is it?
I do ask, though. It's pretty quick when you talk to a real estate agent from another area that you haven't met before. It's very clear within a few minutes if they know what they're talking about. I mean, it's 2.5 seconds. You're like, oh, are you new? And if they do, I'm like, they want a more seasoned agent. Let me go to the next person. And I interview those people beforehand before I ever send it to the real estate agent. How about you, Javier? How do you handle referrals?
I think Smallhorn has the best referral network. I want to say for people looking for a realtor, I think there's like a fine little area where people need to focus on, because the things that make an agent great aren't scalable. So if they've scaled, that means they don't have those things that make them great anymore. Being available, having the time, patience, and time to educate you and walk you through things. There's like a right time where if that solo agent is too busy, they're not going to give you there, even though they're a great agent and they might have been referred by like your cousin because they got an amazing experience. They might not be in the right part of their life to give you a good service. Likewise, so you have to find someone that's really good, but maybe is not so busy. It's like a really nice thing that I'm sure Smallhorn picks up on when she talks to people, because if they're a team, you're right. They're already scaled past that point. So they're going to just hand you to someone that's going to have those talents.
Right.
But there's like a fine line people need to have, not too overworked, but not brand new out of the school either.
Yeah.
Orlando,
you do referrals though, don't you? Just with your own network.
Yeah, my own network, but it's normally individuals that I've already that I got my own network that I've worked with, and so I know exactly how they are, and I've done multiple deals with them. So that's normally how I refer.
Right. Because I refer to a lot of people throughout the country. So but I because I've been doing it for so long, I do have a tight knit group of people that I know that can handle the referrals that I send out. And we have an ongoing relationship, and I know who works and how they work. And even though there might be an agent in that area, let's just say in Maryland, I know, like, soon as I start talking to the person that needs the referral, I know which of those two agents that I'm friends with in Maryland that would be better for them. Like, I'll just say,
personality matters.
Personality and the way that
does.
they work. Some people just want to have the numbers. They don't want any, small talk. Get to the meat of it. And other people are like, I want the experience of buying a house. That's a completely different agent. So I've been very fortunate to have really good relationships with a lot of real estate agents throughout the country. If you need a referral in your area, you can always visit my website at KristinaSmallhorn.com. Let me know. I'll hook you up.
Those sound like investor realtors there, with the people who want just get to the meat of it. Like, hey, come on, just give me the numbers.
And I do have a lot of investors. A matter of fact, this is a little side note for everybody. You guys are getting a sneak peek. So there's only 336 of you. So this is this big secret. I'm telling you guys, but don't tell anybody. I'm actually going with an investor, and I'm sneaking into the boxable factory to see what's really going on there. No lie, I'm really doing that. They don't know I'm coming.
That's super exciting.
That is so exciting because they don't know I'm coming. And they don't watch my stream. They're busy people. So I'm very excited. So in January, I'm getting on a plane, my husband and I, and we're sneaking in with these investors who have an appointment with Boxable to see what's going on in this factory.
Are you going to have a monocle and a fake mustache? Would
that be something? That would be something. Should I do that? I don't know if anybody's ever seen my old content. I have tons of wigs. I have tons of costumes. I could totally pull that off.
That's funny.
I can even throw one like a really bad accent and be like, I want to go through the factory, please. All right. Gilroy says, Gilroy Gal 36 says, if the most expensive home in my neighborhood sold for $464,900 about a month or so ago, How can the builder justify the current price of $550 for this similar house? Go ahead, Mr. Javier. I know you've got an answer for this.
They can't justify it. They're going to experiment with the buyers, and the buyers are going to be willing to do it. That's the problem. Is you cannot justify prices when buyers are willing to waive their appraisal contingencies, right? So there is no justifications. The reason why it's 465 in the first place is because somebody probably waived their contingency to get to that point, and unfortunately, it just keeps happening until it caught up with companies like Zillow, who are now have to lose money. So I'm actually, you guys are getting the inside scoop. This happened to a few clients already. I am actually getting rejections from Fannie, like close to closing loan, where Fannie Mae and Freddie Mac, I guess they have a scale from 1 to 5 of how overvalued the appraisal is. I had my first one in 8 years that came in at 5, like this last week. So it's super rare, but I'm thinking that you probably know what I'm talking about, Orlando. So that's starting to happen more often. I think this whole over appraisal thing they're gonna stop getting away with it. So that's why they can't justify it. They're just really just trying to squeeze as much pennies as they can because they're probably not making too much money because they're probably, I don't know, something's going on with them.
Have you seen that, Orlando? Have you seen that 5 where they've rejected the appraisal of overvalue?
Yeah, I've seen it plenty of times, especially obviously in this last year. Each program is different. VA is really stringent on it, and they have their own little back admin thing, the same thing. But they're, like I said, FHA has a lot more room in there. So if you get to a 5 on there, then man,
it was a conventional 5% down loan too.
Whew, man.
I know, right?
But some kooky stuff I will say that was happening at the beginning. The house would be, let's just say it was for sale at $470,000. Then somebody that came in with a freaking truckload of cash in their pocket, they were like, I want to win this bid. I'm going to win it. Their bidding war was on. And they, like Javier said, let go of all their contingencies. They offered $500,000 and they got the house. Then that becomes the new comp in the area. Then the next person comes along, sure enough, same cash buyer, another cash buyer, same kind of thing. They had a truckload of money. They were willing to put it all on there. And then they go ahead and buy it for $525,000. And then somebody else comes in and says, yeah, I'm going to get a loan. Yeah, it appraised for $500,000, but I will pay cash over $530,000. So now you have 3 comps that are over that amount of money. So now that becomes a new comp in the neighborhood because of the most recent sales.
It's crazy because I always explain this to people. Say you're going to let go of the contingency, but if you go to the dealership, you won't buy that car unless you do a test drive, right? So why would you do that on one of the biggest purchases of your life, if not the biggest purchase of your life? That makes no sense. So I have no idea why people are I know that why they're doing it just so they can win, but at what cost?
That winning thing became a thing of FOMO, massive FOMO. Did you have that in Pittsburgh?
Yes. We don't have too many new house builds in Pittsburgh. We have one of the oldest housing markets in the country, actually. However, during the pandemic, there were so many people relocating from major cities, New York, LA, Chicago, because of the affordable. They got to work from home. You can get an A school district house for $300,000 in Pittsburgh.
I wish here. I wish here.
So I did have clients who came from areas and they were very ready, willing, and able to waive contingencies. And the way that I word my contracts, and I ran this past the PA broker and legal hotlines, is rather than inspections for informational purposes only, which in Pennsylvania has actual no merit, saying that the buyer is responsible for the first $1,000, $5,000, $10,000, depending on where they are financially, results of the inspection report. So they absolutely still have an inspection. They still have radon done. They still have pests done. However, it's saying I'm not going to claw back some of that extra money. And if the agent is seasoned, if the listing agent is seasoned, and in a low inventory market, most listing agents are seasoned, they actually say to their seller, and I have done this myself, saying, I don't want the no inspection home. I want the home that says we're going to get an inspection and we're not going to claw back that money, because that tells me that the agent is seasoned, the buyer is aware of the market conditions, and yet not caught up in a frenzy. So they're actually statistically more likely to close.
Yeah. Joe has a question. He says, is corporate home investment and corps making them rentals really in anticipation of the soon-to-be housing crash and an increase in demand for rentals similar to the 2008 behavior? That's, you know, the thing is like we said at the beginning of the stream, investors buy homes to offset inflation, and that's what they're doing. And it's been since the dawn of time. That's what they've done. Every time that it looks like, you know, interest rates are increasing in other sectors, the first thing they do is they stick it in a hard asset like housing. What do you have to say, Orlando?
Yeah, it's the same thing. Like, you know, there's all types of things. It's just not, you know, them anticipating, you know, some doom gloom, you know, crash that's about to happen. It's multiple things. You know, it's you know, inflation. It's got all other types of things. But I think the most thing, what people most likely don't look at when it comes to investors, and is investors are always looking at the cash flow portion. They're looking at cap rate and things of that nature versus, you know, what will the house sell in the future or whatever. They care about how much money is going to be bringing in year over year. That's really the goal of an investor. So that's the reason why rentals are so important to them, you know.
And rental prices throughout the country have gone astronomical. First time I've been in real estate that this has happened, where there were bidding wars for rental properties. People were like, I've seen that.
I had one on my listing in July, 4-unit building.
So crazy, so crazy. And then that, like, some of them were like, we'll pay a year and a half of rent just to get the house. Like, we'll up our deposit. You know, like, what are you doing? This is a rental. No, do you see that in your area, Javier?
Yeah, back when I got my license 8 years ago, I was practicing with rentals, and there were multiple offer situations even then. So now it's even crazier, and people are actually offering to pay more than what's on the price. They're going, hey, I'll rent it out. I'll pay this much instead of this month, and this so would say I'll pay this much, and so it's going up higher and higher. So a lot of times that closed rental price you see is not necessarily what the landlord dictated; it's what the tenant offered.
I was playing around with the little doohickeys. I don't have a guy with me today that's doing all this, and he usually does all this. So I'm like, oh, look, there's buttons. Go ahead,
Javier. Have you seen that in single family duplexes, 4 units, or like what size are you seeing that in?
We don't really have a lot of duplexes and fourplexes in Phoenix. We have a lot of single family and apartments. So I think the ones I've seen is single family. Our duplexes and fourplexes are scattered and rare. So you're just seeing more with single. I know in Pittsburgh, there's a lot of those, right?
We don't have any here.
And I had one, and it was a referral from an out-of-state agent, and it was her mother's property. And I was referred because I have rentals myself, and I sell a lot of duplexes, fourplexes. A lot of them happen off market. 40% of Metro Pittsburgh properties are bought and sold off market, but yet 98% are with an agent. So kind of wrap your heads around that. Anyone who's tuning in. So we put it on the market. We had 3 offers in a week. They were all seasoned investors. They were not like looky-loos. And all 3 of them came in literally within like $1,000 of each other. So they were all using the same formula. You know, it was just, and I expected to have one solid offer within 3 to 4 weeks. And, you know, they were even, not everyone was doing financing that would work. A lot of the local banks that were underwriting files were kind of pulling back and being a little bit more stringent. They didn't like that one of the units was vacant. So
the conversation in the chat is going to tiny housing, and I will agree. The tiny house prices have gone astronomical. I saw one yesterday. It was 137 or 38 square feet. They wanted they wanted 38,000. So it was like over $225 per square foot. It was, I mean, it was so small. Like, how could anybody live in there full time? That's crazy. 38,000 for like 130 square feet.
Isn't that crazy?
What? I mean, what are they building out of? Gold? I mean, like, this is like this craziness to me. Like, well, manufactured homes. I don't know. Do you finance manufactured homes, Orlando?
No, I
No.
don't. No.
Well, manufactured homes, even the cost of those have gone up price per square foot because they can't get them out. They're like 15 months behind on some manufacturing plants to get them out and about throughout the United States. So, question: does it make sense to cash out refinance to get a roof you cannot afford and it's needed soon? This is an Orlando question. Go for it, Orlando.
Yeah. Well, I mean, if the roof needs to be fixed, it needs to be fixed. I know she said she couldn't afford it, but what's the other option? The roof falling in and destroying the whole property. So you have to, you're just gonna have to go ahead and move forward with trying to figure out some other way to get the money for the roof, or if your last option is getting a refinance, go for it. But look at this: if you do refinance, it is low rate, so it is cheap money. So.
I always just say talk to a financial advisor when it comes to those kinds of things. And
Right.
if you can get a low interest refi and you're not suffering with closing costs, then it's something you can't not have a roof.
Right.
And the longer you let that go on a house, the more problems you're going to have throughout your house. Water can get behind windows, then you have to replace windows. You have problems with insulation in the walls. I mean, a roof is super serious and it's very expensive, but make sure that you have the financial wherewithal to be able to do that. And cash out finances can work. Yep. All right, here I wanted to say thank you for the $5 super chat, and we did get another super chat that came in. As soon as I can find it, I'm trying to put it on the screen here. I have to scroll down a bit because I was trying to keep in line with everybody that has been. It says, should I wait for the market crash to buy a multifamily, or should I jump in now? I don't want to buy a house for $100,000 over real value just for it to never be worth as much as I bought it for. You are the multifamily person. Go for it, Tanya.
Thank you for the great question. Thank you for the super chat. Poor Man's Podcast. Let's start with the beginning. Should I wait for the market to crash? That's not going to happen.
Not this year.
Not this year. Not next year. This is incredible demand. We see corporations parking their money in multifamilies. We see investors, institutional investors, mid-sized investors parking their money into multifamily units. So the second part of your question, should I jump in now? Yes, absolutely. You're not going to be quote unquote underpaying. Most investors who are buying 2, 4, 6, 8, 10 units are buying them to hedge against
inflation
and to combat the real world effects of market volatility. People, just think about the mind of just a basic human being. What is the very first need that a human being has? Food. Okay. Number 2 is housing. Period. Full stop.
Medical. We need medical. That's a whole different show. We definitely need more medical affordability throughout the United States. The very important question, it says, where did our kitty mascot go? Marcel's around here somewhere. I don't let him. He
somewhere.
He's around here. He likes to jump in my streams. There's been some questions that have come in for you, Javier. It says, at Javier, people without inspection are crazy. Too many homes within hidden issues and hidden expense issues. That is just true, Killian. 100%. Did you see some other? There was a question for Javier. Are you answering them as they go along?
A little bit up.
I am. There's a Zillow one that I wanted to see if I can chat about for a bit.
Okay.
You see it?
Oh, the green.
No, it wasn't green. I already answered CC Moon's super chat, in case you're wondering. There was a guy that I already answered her personally.
Okay. I hope you got your answer, CC. Thank you for the super chat.
Someone was asking me about what the effect of Zillow in my market has been.
Yes, that was early on. I did miss that.
So I can actually, if you allow me, I can share the screen and show you.
Yes, go for it.
All right, let's see. Can You guys see that? Or I think you have to get access. I don't know how that works.
There you go.
All right, there you go.
Huzzah.
So right now there's 8,000 listings for sale in this specific block right here. And people think Zillow has such a massive impact on these 8,000, but in the last 30 days, this is the last 30 days of closings have been 8,177 sales. Zillow has only been, wait for it. Oops, wrong one. 231. So only like 3% of house sales have been through Zillow.
That's nothing. That's literally negligible.
Exactly. And then active houses for
Rounding
sale
error.
right now in that area, 161 of them are Zillow properties. And 5,000, there's total, was it 161? 555, general numbers, like 3 or 4%. So Zillow, once again, like I said in the beginning, I can stop sharing now. I don't want to, I might Googling you guys. I want you guys to see. Once again, it's not necessarily.
Well, Orlando's an accountant, so
I know. He's gonna snitch on the IRS on me. He's like, "You're writing off what?" No, I'm just kidding. So the problem is that once again, not what's happening is people's perception or reaction to what's happening. So people heard about the Zillow thing, and of course, all of our housing market Andes decided to come and started talking about the crash, right? But the reality is, they're only 3% of sales in Phoenix. They really are. Their impact is really nothing. But people believe it's something, and therefore it is causing people's emotions to react or underreact or whatever the case may be. People need to stop trying to get external circumstances to influence their decisions.
That's exactly right. And Javier and I, and we all make real estate content. And yes, we do know that there's titles that attract more clicks, right? So we know that. And Javier can say, and Orlando probably could tell you, if you use the word housing crash and bubble and expect a crash and blah, 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 we know that will get us clicks. We know that for a fact. I personally have taken the stance that I will not use the word housing crash relating to a housing crash unless there's a housing crash. I'm not going to do that. I'm not going to speculate that this month the housing crash is going to happen or next month. The only time that I ever talk about a housing crash is that there isn't going to be a housing crash, because there isn't going to be one right now, right this very moment. There's channels that have blew up in the last year that literally the only thing that they create is housing crash, housing bubble, housing collapse. And they did it for a year. And guess what happened? All those people that watched that channel and took their advice missed out on buying a house. And now those homes that they missed out on are now more expensive. So be very careful on reading just headlines. Listen to everything they have to say and do your own research, not just listening to your friend, not, listen to several different people, not just one person. Listen to the National Association of Realtors, listen to some podcasts, listen to other real estate agents that are in your specific area. Don't listen to just myself or Javier or some other YouTuber. Take all of that information and make that decision for yourself before you decide, that's it. It's all going to collapse. The whole market's going to go down. That's it. This is what they say. Don't listen to it. What do you have to say about that, Javier?
I say preach. It's perfect.
we gotta preach.
It's like Javier points out, 3% Zillow controlled transactions or Zillow influenced transactions are 3%. In the West Penn multi-list, which is Metro Pittsburgh, 40% of the homes, 40% are sold off the market. They never hit Zillow, they never hit realtor.com, and yet 98% of the transactions still involve an agent. Still involve an agent. I was leaving a property that I had sold. It was off market, and it was in the best interest of the seller and of the buyer. And a neighbor flagged me down and said, "Oh my gosh, I saw that there's a moving truck." It was several days after closing. I said, "Uh-huh." And she's like, "Well, there was never a sign in the yard. It was never on Zillow." And I said, "Ma'am, I have news for you. I'm here to tell you that 40% of the houses sold in metropolitan Pittsburgh area are sold off of the market. If you don't have your finger on the pulse, if you're not speaking with an agent about that, getting market reports, you have no idea." And I was very kind, but I am very blunt. I said, "You have no idea what's going on. You're seeing 2/3 of the picture instead of a relevant 1/3 of the picture." She was absolutely stunned. Absolutely stunned.
Speaking of really good videos that break down some of these housing crash videos. Real estate advisor Sir Ashley did a fantastic video. I want to say it was like his third video back. I actually put it in my community tab because he broke down some of the charts and numbers that some of these people have been using to say that there is a crash, right? So he's like, wait a minute, hold on. Let's take a real look at this. Okay. Yeah, the little numbers going down, but what does this chart really say? And I like nearly cried. I was like, thank you. Somebody had to say it because I'm too chicken. So like I have it in my community tab. You go check out his channel right there. But thank you so much for the $20 super chat, my friend. I'm going to pull up another question here. If you guys want to, while I'm trying to search for the question, you guys can chat amongst yourselves.
So who do you think is watching those videos, Smallhorn?
I think, you know what I find curious is that I do think that people watch us all, because I noticed in my comment section, a lot of the same people that are in your comment section or in my comment section that are in that comment section. Because I see, who's listening to this. What are they saying? I want to know what they're saying. Because I'm curious to get into people's mind on who thinks this is really happening and why do they think this. I think headlines throughout the United States have, with the housing market, they also know this is what gets people to read their articles online, and they perpetuate this. Yahoo News is the worst. They literally say housing crash and bubble every single day on all their articles. So they know that's what works. So that's why they continue to do it.
There's no penalty for bad information.
Right.
There is no penalty for bad information. But I mean, like, I will be the first to admit, and I've said this many times, when the pandemic started, I made a video about the housing crash because I believed, because there were 8.1 million people that went on forbearance or something like that, 7.8, whatever. That many people went on forbearance. I'm like, that was in, like, made the pit of my stomach turn, because I was in the last housing crash and I was thinking about all those people that had those interest only loans or whatever. And I'm thinking, this is doomed to repeat itself. Now we have, the data has changed. It changed over time. They extended the forbearance plan for people. People were able to restructure their loans. Then I stopped making those videos and I'm like, look, this is the reason why I'm changing my tune, because this is what the data says now. I made those videos before because that's what I truly believed, but I'm willing to say, hey, I was wrong because this information has changed. Other people know that that's what gets people to watch them on their channel, and they will continue to make those kinds of videos because it gets people to click on them. I won't do that for myself. Javier and I had a long conversation about that, and it was depressing to watch all these channels pop out of nowhere. And like, they're like, crash, 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 bubble, bubble, bubble. And I'm like, I'm not doing it. I'm just not doing it. We both came out with a video literally at the same time going, nope, no more. Not going to do it.
And to your credit, you were able to masterfully turn into affordable housing content, which was amazing for you. I think the most ironic part about this is that they actually have the one, if we're talking about the same one, has a consulting business for investors, and like to pick the right market to buy properties in. So essentially, people that are home buyers, that are first-time home buyers, are being demotivated from buying and being scared out of buying. And with the same person is also consulting investors that are buying properties to rent them out. So essentially, you're being scared out of home ownership, and he's helping the people that you're going to be renting from. So in essence, it's like if you look at the whole picture, yes, we're realtors too. We have to acknowledge we're realtors, and yes, we benefit from you buying or selling. But at the end of the day, everyone in this call hopefully doesn't care if you use us or not. You should make a decision based on your own personal finances.
Correct. Absolutely.
Yeah, I think that the most of the viewers that are watching that type of content, like Javier said, they're on the fence. They're trying to decide if they're going to purchase or not. Also, I'm starting to see a lot of people who have sold their properties at a really high value, and they have that money left over, and they're trying to figure out, should I buy now or should I just hold this money and wait because there's going to be a crash? So they're trying to figure out what to do with all that extra money that they have. So I've seen a lot of that happening.
No, don't hold on to cash.
Right.
No.
But a lot of people small horn coin.
Yeah, don't hold on to cash. Bad. Somebody said smash the like button. Oh wait, I want to put this up. Fake news. Question. At some point, with all the opinions people have in statistics can be interpreted how you want them to be interpreted. Can people admit no one knows what's going to happen in the future? A lot of laughs. To a degree. But data itself doesn't lie. So when the data shows you one thing, you can look at history and everything else. And if it says that, like we already know, Jerome Powell said that the interest rates are going to go up. He didn't say how much. We already know that there isn't enough supply of homes on that market. There haven't been for a while, almost 2 years now. We're at a record amount of people. Over 5.1 million people are still looking for an affordable house throughout the United States. We also know that there's supply chain issues with the amount of construction that can be done. We also know that not as many people are selling their houses. That data has not changed. Yep. So you cannot say that there's going to be a crash when that data hasn't changed, unless everybody and their brother decided tomorrow to put their house up on the market. That would be the only way to change it. Or there was some other financial disaster in another sector that would affect housing. Whoo! Go ahead, Orlando.
Well, I always tell people, I mean, obviously I can't predict the future. I don't know what's going to happen, but to your point, the data does show a lot of things. When you look at the graphs and charts and history and all that other stuff, you start to see the cycles and things that are going to happen again. But I think the big major point about that is, once again, when we talked about it earlier, instead of trying to figure out when the dive or the crash is going to happen, especially for your personal situation, you just need to evaluate it like that. It's your personal situation. And what are you trying to look for? Are you trying to look for investment? Are you trying to look for housing for your family? What are you trying to look for? When you tend to try to, time this market, you end up like we were just talking about, losing out on buying a house because you thought a crash was going to happen, or vice versa. So,
what do you have to say, Javier?
Honestly, you guys said it perfectly. I have nothing to add. That's exactly it.
Do you have anything to add?
I don't. You perfectly summed it up. We have data that shows us what is happening. We're not going to miraculously build, 10 million housing units. We're not going to. The Fed has come out and said this is what we're going to do. When people show you how they are, tell you how they are, what's going to happen, that make those decisions, listen to them.
And the Fed doesn't care if homes are not affordable. They only care about the health of the economy. So if it's not affordable for you, they don't give two flying flips. Sorry. Question. When owners of a small condo complex want to amend the HOA documents to allow for rentals, does the mortgage company have to agree to the change before moving forward with the change? That's a good question.
To not allow for rentals. Do you mind if I jump in? I actually have a condo board certification in Florida. So this is right up my alley.
Who knew that? I didn't know that. Well, Tanya, coming out with the degrees.
Pennsylvania doesn't have a condo board certification, so I got it in Florida because so many of my clients are snowbirds, and I felt like I needed to know more. So that's a great question, TW. So, do you mean the mortgage company for units that are under contract? I will say that you need a real estate attorney specializing in HOA governing documents to amend those documents to either allow or not allow rentals, because that will affect the health of the reserve funds. It affects the pool of buyers that you can have, and it affects FHA and whatnot. So generally speaking, it is healthy for condo complexes to allow rentals. And it is healthy to cap it at a certain percentage, 10, 15, 20, 25%. And it is also healthy to have the leases have to go before the board, and the board approve tenants as they come in.
HOAs also need to cap how many rentals are in single family dwelling and neighborhoods as well. That's how, I look at it. We have some neighborhoods here that like basically turned into rental housing units, and you can tell the difference in.
Mhm.
And it's the same kind of complex, right down the road that doesn't have as many rentals, but you can tell the difference between those two very easily, very, very easily. So, Javier, you had a visitor.
Yeah, Rudolph here visiting us in the flesh.
Oh, that's so cute. All right, let's throw up another. Oh, we got a new channel member. Thank you, Chris Augustine. Thank you for becoming a channel member. Now you get this cool little icon. If you become a channel member, you get a cool little icon there that lets everybody know that you are part of the cool team. Oh, cool. Killian one says, I had many I watched. Started with a realtor I had an issue with. Kristina, I finally had to narrow it down. You won. Love you because you seem to be open and honest.
Oh.
Well, I mean, the thing is I'm going to be there. I have no skin in the game to tell you bad information. There's no skin in the game for me to do that. My only thing, and I want to be able to go to sleep at night knowing that I did the right thing. And if I wanted to do it for only views, I would make housing crash and housing bubbles and collapses of the housing market videos over and over and over again. Those people are crushing me in views and YouTube AdSense. I won't do it. And I know Javier feels the same. What do you say, Javier?
It'd be nice to not care about your content like that. It's like I tried. I'm like, why don't I just do it? Why don't I just do it and get a bunch of views? But I just physically cannot.
I have to sleep at night.
Yeah. Bye, Sadie.
Bye, Sadie. Bye. You don't do those type of videos, Orlando, do you?
No, I did one about 3 lies at the housing bubble or whatever. So I do stuff like that, explaining to people how they need to, what we just spoke about, personally make their choices, blah, 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 blah. So yeah, I totally would know what you're saying, but I do see those all around. I mean, it's everywhere.
Question. So in SoCal, I'm guessing, I found a 1969 built, manufactured, updated beautifully, stick built, manufactured,
updated beautifully to a stick-built standard.
Oh, stick-built standards. Thank you. But we are unable to finance because of the year per HUD. This is true. So any manufactured home that was built or constructed before 1976 wasn't built to any kind of building standard or code. Even though yours has been upgraded, the HUD has said we cannot finance anything before 1976. Now there's plenty of lenders throughout the country that won't even touch a house that's built before whenever Hurricane Andrew was, because the specifications even went up even higher after Hurricane Andrew. So it's very difficult to find a manufactured home company that does mortgages that is going to do one for anything that's before 1976. I dare say it's nearly impossible. You may I don't know if you can do a personal loan. I don't know how much the house is. Most likely you're going to probably have to buy it cash. What do you say, Orlando?
Yeah, I agree with you. That's the same. Yeah, you're probably going to have to buy it cash. Yeah. That's pretty old. There's a lot of things that have changed since then. A lot.
Oh yeah, since 1976, they weren't even they were built to no building standards. Now I get that what they're saying. I get what they're saying, but I can understand the liability for a person, that the company that's holding the mortgage itself, and why they wouldn't want to do that.
Yeah.
Question: do what happens if interest rates decrease again and there is a limited supply on the home? Will home prices increase again or remain the same? Go ahead, somebody take it. I already know the answer to this. Go ahead.
Javier, I'll field it to you.
Okay.
Javier, going to do it?
Not really. Orlando can do it much better.
The house prices will go up.
Go
down. If interest rates go down, and the supply of houses keeps decreasing.
Yeah, but But I mean, I guess this is a fictitious world we're talking about, right? Like,
Yeah.
This is why we all sighed, because we all knew the answer. We're like, how do we say it?
Yeah, well, the thing is that interest rates aren't going to go down. I mean, they
they're
might
not.
they might just kind of trick us one day and go, oh, look, we're
Right.
down a half a point, or look at that, you know, like they're gonna kind of tease you for 3 days, and all of a sudden then they pop back up again. That's what they did. They did that for a while, you know. They would drop it down for a couple of days, and you better lock in that rate, because the
I
next
had
day
clients that did that. That did a rate lock, and I remember that.
they'll just keep
I
going
was
up and
happy
down.
for them and happy for them.
Yeah.
Yeah, right.
Well, I hate to be the one that was late and also leave early, but I gotta go, y'all.
Okay.
All right, Javi.
Oh
Hey,
man.
see you later, Javier.
You know, I have to tell you, I want to say thank you and Happy New Year to you if I don't see you beforehand, Javier. And I also want to tell you that I began the year of 2020 with you on my live stream, and I'm ending the year of 2021
Oh,
with
is that
2021.
so?
Yeah, so
Well,
like,
I think
had you December of 2020.
I think this showed me that we should be going to each other's live streams a lot more often, because when we get on, it feels great. So I'll be seeing you more often for sure.
Just invite me. Like, I'd love to be over there. I've only been on
January.
there
We already said it. Oh, I need to get back to making lives first. That's the first thing we got to do.
There you go. There you go.
Right.
Well, thank you,
It was
Javier.
nice
Everybody
meeting you, Javier.
See you guys.
Bye, Sadie.
Yeah.
Oh, he just popped right off. He's done.
He had to go. He had
He's
to
like,
go.
forget you. I'm done.
Was he drinking coffee? Maybe he had to use the restroom.
Well, I mean, I'm going to tell you, I have the bladder of steel. I'm letting you know. All right. I'm trying to get through these questions. We're going to do a speed round. Okay. Because I don't want anybody to be left out. Question. Do you see any laws or restrictions being put in corporations preventing them on eating up a certain amount of real estate? Also, what do you think is the outlook for small time business investors? Quick answer, Orlando.
No. No,
Quick
I don't
answer.
see. Go ahead.
No, I don't see it, and I think the outlook for small time investors is grim.
What do you say, Orlando, about small time investors?
Yeah, I say the same thing. Yeah.
The thing is, with restrictions of corporations, that it
Okay.
comes all the way down to the smallest level of your local area, even in your subdivisions. If new subdivisions are popping up, you have to show up to those board meetings, and you have to express the fact that you only want X amount, like less than 1%, to turn into rental units. You can go onto your own real estate, your own HOA board, and say, we are not going to be selling to big corporations. You can put that as a bylaw. There is things that you can do in your local area and in your local neighborhoods. You just have to be willing to put that effort in. So that's what I have to say about that. But they're not going to put any restrictions unless we, as people, start squawking a lot.
Right.
Because
I
nobody
agree.
listens unless you're screaming, and it always seems like the dumbest people are the loudest. So let's get some smart people talking. I'm trying to scroll through these questions really quick. All right. Betty says, do you think there will be a possible tax penalties on property owners with multiple properties, so as to discourage small investors to free up the residents for buyers?
That's a great question, Betty.
That is a
I
good
literally fielded that question a week ago, and I had a quick answer then, and I'll have a more detailed answer now. So in pending legislation, yes, there are tax implications for selling rental properties, and older investors, small, medium-sized investors. I am myself an investor in Pittsburgh. I have rental units. My company is called Common Ground Investments, and part of the way that people are retiring is they sell their rental properties, and that is a concern. It's on the horizon. It hasn't been passed yet, but it is happening. And part of those units going onto the market for buyers, for entry-level home buyers especially, is part of the natural market progressions. And we've had those units held back from COVID, and I don't know whether or not we're going to see them in the future, but the tax penalties are something it's brewing, and there hasn't been a decision made on it as far as legislation goes. That's a very good question.
Do you want to add anything to that?
Yeah, I'll just add real quick. Do I think it's going to happen? I don't know. I think probably not. The only reason why I say that is because a lot of there's a lot of real estate owners and investors that are in Congress and all this other stuff, and it seems to tend to go the heavy investor or investor route anyway with taxes and everything else. So I would say no on that portion. So, but yeah.
We got a new channel member, Abundanita, and we have another channel member that just popped in. Crazy Maze Stash. That's a great that is a great channel name. Thank you for being part of it. Look, it says Kristina, who spells her name correctly, by the way. Thanks to all of you for having. I've been watching your videos. I'm looking for buying affordable housing, land in the desert communities in California. But it's hot. But it's hot. But it's affordable. Hot. Oh, well, I know all about hot. I live in Louisiana. You may want to even check out Arizona and outside of Las Vegas. They have more. I know that you're in California, but they do seem to have more affordable homes outside in those states than California does. Just
I agree.
FYI. Y'all, this was the craziest year I've ever been in real estate. I don't know about you guys, but I really want to say thank you to Javier for coming in and Tanya for once again being a part of the stream, and Orlando.
Thank you so much.
Expert here. And I want to thank each and every one of you. There was over 444 people that joined the stream today to talk about the real estate market. Next week, we are taking a week off because it is the day after Christmas. Kristina needs to recover, and I will be back the following week. So thank you, everybody, for being a part of it. I appreciate you. Thank you, Orlando. Thank you, everyone. Thank you to all of our new members and our super chatters. And I hope you all have a very Merry Christmas. Say goodbye.
Bye, everyone.
All right, you got to dance. We're going to do this. Dance. Woo. You got to dance. You got to dance, Orlando. That's it.